On Business Incorporated today, Brics foreign ministers meet in Cape Town, South Africa. Rand hits a new low as investors react to Brics planned summit. Maritime piracy at 30-year low. Good afternoon. It's a fresh episode of Business Incorporated here on Channels Television. I'm Ini John McQuarrie. You're welcome. We'll get right into the markets. And we begin with Nigeria, since that's where we are. And it's not looking so good, although it's more undecided, as the NGX is negatively undecided. That's it, 0.00 as intraday, still sustaining the 55,000 index limits there. South Africa, however, is in the green, 0.95% at 75,777.13. South Africa is receiving a whole lot of attention at this time because of that Brics meeting going on there now. It's supposed to start about 2 p.m. local time over there. And the major summit is in August, and we know what's happening with that. And Russia, President Putin there. Now, moving to other parts of Africa, we look at Egypt and see that it's doing good at 0.68%, 17,614.39. Kenya closed yesterday also green, 1.86%, sustaining the 100 points that it started a couple of days ago. Middle East also, now we see that it's the same position for Abu Dhabi as intraday, 0.00%, just like Nigeria. But in Dubai, it's positive, 0.13% there at 3,581.27. Moving to other regions now, Saudi Arabia is also in the green, 0.27% at 11,043.63, while Qatar is on the flip side, 0.89% at 10,245.01. Now let's go to Europe now. Top EU and US officials have met in Sweden for the Bilateral Technology and Trade Council, that's TTC. Their discussions revolve mostly around finding shared rules to regulate artificial intelligence firms, with EU officials saying that they expect a draft of a code of conduct on AI to be ready within weeks. And we know that AI has been booming. NVIDIA did hit that $1 trillion market cap, and AI is so much in the news. So there needs to discuss the code guiding the usage of it. Let's have Andrea now join us and give us more details about this meeting, the EU talking there about the code of conduct for AI. Andrea, how is that going? What are some of the details that we seem to have missed?
Thanks for having me. The EU-US TTC Summit is a meeting held twice every year for American and EU officials to discuss common approaches to the most pressing trade and technology matters. At this week's event in Sweden, the central issue was indeed artificial intelligence, and in particular the efforts to regulate it effectively and timely on both sides of the Atlantic. The key goal of the US and EU is to come up with a joint plan to shape new standards around issues like transparency, risk audits, and other requirements from AI companies, especially those firms developing generative AI solutions like ChatGPT, Bard, or Midjourney, among others. Now, the standards so far are just a rough draft and mostly consist of a two-pager proposal by the EU Commission for a shared code of conduct for AI firms. That would be a non-binding code, a wording that shows how regulators are trying to exert control on the technology without stifling innovation in a field with deep strategic ramifications. According to Margrethe Vestager, EU's digital commissioner, the plan is to come up with a joint transatlantic proposal to present to other G7 leaders in the fall.
Yeah, and you mentioned that the different approaches. What are those different approaches from the EU and the US on these AI regulations?
Despite the common intents, there's a clear divide between Brussels and Washington regarding the actual approach to a set of regulations that should follow this code of conduct in the long term. The EU comes from a standpoint of firm, mandatory rules. That's the same approach we've seen on data privacy before. Europe's legislators are planning to come up with a strict definition of the potentially harmful uses of AI. Then, based on that, they plan to require firms not to apply the technology in certain ways. Meanwhile, in the US, we're seeing that the US is going for a more hands-off and market-led approach, which relies heavily on the industry setting its own rules. That leads to more innovation freedom, but also carries the risk of big tech writing its own playbook based on corporate interests. Despite this different philosophy, officials on both sides of the pond agree that they have to come up with a set of well-tuned regulations, while at the same time making sure that the West keeps the upper hand on AI against global authoritarian adversaries like China.
All right. So what about the markets? How's that looking at this time?
The AI boom already had its effect on the US indexes, with AI chipmaker NVIDIA as the biggest market mover. The company briefly surpassed $1 trillion in valuation earlier in the week before investors cashed in on the hype yesterday, sending the stock down almost 6%. In Tokyo, the Nikkei traded higher as investors cheered the approval of the debt ceiling bill in the US and the possibility that the Fed will pause its interest rate hikes. The news from the US also pushed the indexes in Europe. In London, the FTSE 100 opened in positive territory, and in Frankfurt, the DAX followed, regaining some of the losses from previous trading days.
All right, Andrea, thank you so much for that update. We'll do it again tomorrow. Let's move over to London now and see what's going on there. We have Juliana joining us. Juliana, good afternoon. Good to have you back. And you come with somewhat positive news, I guess. House prices fall at the fastest in nearly 14 months. But I know you always have the other side of the story. So what's the full story about this fall in house prices?
Good afternoon, Innie. It's great to be back. It's always lovely to share a screen with you. But you're absolutely right. I think the data that we saw this morning from the Nationwide Building Society does suggest that perhaps buyers are struggling with affordability. We are, of course, going through a significant cost of living crisis. And we've got interest rates at 4.5%, which means your mortgage payment at the end of the month is going to be particularly high at the moment. So if you're a pretty savvy buyer and you're listening to all the forecasts which suggest that interest rates could dip within the next couple of months, you're putting off that purchase for your home, which is not great for the housing market that are really still struggling after the pretty disastrous Kwasi-Kwarteng budget during Liz Truss's pretty short tenure. It was during that time that we started to see house prices fall because, mortgage rates started spiraling. They've since settled, but of course there are so many other headwinds that are hitting house buyers at the moment. Hold your breath. I'll tell you what the average price is of a UK home, because it's not cheap. It's £260,736. And I always have to say this with a caveat, because of course you'll have to double your money if you want to live in London. But there are causes for concern, because we know that the Conservative government are trying to turn generation rent into generation buy. It's incredibly difficult to get on the housing ladder here in the UK. If you just have a look at that 260,000 figure, if you wanted to purchase a home, the kind of money that you'd have to put down is about £50,000, and not many people can afford that in the UK. So we'll just have to look at the data as it continues. But yeah, that's a slight bit of negative news, but I'm sure we can dig for some positive news as we continue talking.
Well, I knew Juliana would give us the other side of that story, scratch beneath the surface. But this should be good news. Hopefully 1.2 million members of staff will get 5% wage from today from the health sector. That should at least ease the strikes we've been hearing about for some time now, I guess.
Well, you know, that's a good point, and you'd think it would, but it won't. We'll start with today's pay rise. This is all part of the Agenda for Change contract after pretty tumultuous, tense negotiations between Stephen Barclay, who's the health minister, and union heads. They did come up with this arrangement on the 2nd of May, so just about a month ago, and it was the fact that 1.2 million people working within the NHS, so this includes 999 call handlers, ambulance staff, people working on the front line. From today, they are going to be receiving a backdated 5% pay rise from April last year, as well as receiving a one-off bonus from between £1,200 to about £1,600. So on average, I think any nurse is going to be receiving at least £2,500 more in their pay packet, which is good news. The sad thing is, and unfortunately, this is likely going to affect the Nigerian community, many of whom do work in the NHS but are contractors. So if you are a contractor and you're not employed by NHS England, but you work from them through a middleman, you're not going to be getting the pay rise. So that's not great because, of course, we know that contractors, cleaners, security men, porters, they're usually doing the dirtiest and the most difficult work. But perhaps that negotiation will come through. I say, Innie, that this is not going to avert the strikes because, of course, if we cast our minds back to when this negotiation was announced, Unite and RCN, the Royal College of Nursing, they actually rejected the pay offer. So even though if you are a member of those unions, you will receive this pay rise, there are still ballots asking whether or not there will be industrial action. So unfortunately for Prime Minister Rishi Sunak, the migraine of industrial action does continue.
Continues, unfortunately. Well, I hope that migraine hasn't spread to the markets at intraday.
It hasn't really, although some of the highs that we saw earlier this morning have dipped a little. Of course, we've got the markets reacting to that housing market data, just wondering whether or not we are going to start seeing a flip and some increases. We also had some PMI data from manufacturing showing that, unfortunately, manufacturing activity is dropping, but the FTSE still is in positive territory. At intraday, the all share is up 0.47%, the FTSE 100 up to 0.48%, and the FTSE 250, the domestic market, that's up by 0.68%. In the currencies market, the British pound is currently trading up against the US dollar by 0.09%, though down against the euro by 0.02%, and up against the Japanese yen by 0.53%.
Thank you, Juliana. Good to have you back.
Nice to talk to you.
All right, the U.S. had a little attention yesterday. Remember that ceiling debt deal? Well, it was voted on yesterday. I'm sure by now you already have the details. But let's look at how the markets reacted to it. S&P 500 futures rose slightly on Thursday after the U.S. House passed a debt ceiling bill in a crucial step to avoid a U.S. default, with the measure now moving it to the Senate. Futures tied to the broad index gained 0.2%, while Nasdaq 100 futures advanced 0.1%. Futures on the Dow Jones Industrial Average were around flat, and the Fiscal Responsibility Act passed by a vote of 314 to 117 on Wednesday evening, sending the measure to the Senate for consideration as a default deadline draws near. And we see that Majority Leader Chuck Schumer has said that he hopes that, in quotes, we can move the bill quickly in the Senate and bring it to the president's desk as soon as possible. Nasdaq Composite ended May with a 5.8% gain as enthusiasm around AI now really moving the market continued to boost related stocks. Chipmaker Nvidia jumped 36% in May, briefly touching $1 trillion market cap this week. Alphabet, Meta, and Amazon all rose also. But let's have Maria Bird, our correspondent in Washington, give us some more details on that deal, that debt ceiling deal that was finalized at least, from the House yesterday.
The U.S.'s groundbreaking debt ceiling agreement that was preliminarily agreed to by U.S. President Biden and House Speaker McCarthy has passed the House. This passing of this bill on Wednesday by the House was unprecedented. It passed at 314 in favor of the bill and 117 opposed. The 117 that were opposed to the bill were split between Republicans and Democrats. far-right Republicans and far-left Democrats just could not agree. They felt this bill was not one that they felt comfortable with passing. But with the overwhelming majority of the House passing the bill, it will make it to Senate. If this bill passed Senate, then possibly the U.S. could just barely make it to pay its bills post-June the 1st.
Yeah, so it's June the 1st. Tomorrow is post June the 1st. But I mean, thank you so much, Maria, for giving us that details. Now, let's take a short break. When we come back, some good news from the maritime sector. We hear that piracy is at a 30-year low. How did they achieve that, and what should they do next? Well, we'll talk about that and a whole lot more right here on Business Incorporated. Welcome back to watching Business Incorporated here in Channels Television. Now, globally, maritime piracy is at its lowest level for almost 3 decades. The overall reduction in activity in the Gulf of Guinea, down 35 incidents in 2021 to 19 in 2022, is a significant contributor, and this has been captured in the 2023 Safety and Shipping Review by Allianz. We have Nitin Chopra now, marine insurance experts at Allianz, joining us from Singapore. Thank you so much for joining us this afternoon, Nitin.
Thank you for giving me the opportunity.
Great. So what do we attribute this drop in piracy to? What has helped to bring it up?
Yeah, so we have a couple of good news today. And of course, to start off, when we talk of piracy, as you mentioned, it is now at a 30-year low. And I think we would largely attribute this to the cooperation between the different, the international navies, the regional navies, the local administration, the initiatives they've had in place for a very long period now. And we are seeing that this is now acting as a deterrent. And there's overall a marked reduction in the number of piracy incidents that have taken place, let's say, of Gulf of Guinea. And if I was to just put that into numbers, in 22, there were 115 such incidents. And 10 years ago, there were 138 such incidents. And the overall reduction year on year has been from 35 in 2021 to only 19 in 2022. So that's almost a 55% reduction in the number of incidents that we have seen year on year. In 2019, if just to refresh the memories, Gulf of Guinea, the piracy was almost 90% of the incidents that globally occurred. And if you were to, take this piracy and armed robbery incident, focus on the other regions, we have the Singapore Straits, which has kind of been in the limelight this year. And if you look at the number of incidents, 1/3 of our incidents, which was reasonably a small number this year, but the majority of incidents, you can say, took place in the Singapore Straits. And almost 38 vessels were boarded successfully in this case. And similar to the cooperation between navies and authorities that we see in Gulf of Guinea, we have regional authorities here, what we call RECAP, and there are almost 14 member states who together run this initiative.
All right.
And
all right, Nitin,
it's something that goes on to take.
Yeah, Nitin, it's not totally good news because we see there's been an increase in fires and shadow tanker fleets, and of course this has brought about economic uncertainty. Does this have anything to do with what's going on in the Black Sea? What's increasing the fires?
We are at this moment not very clearly able to link, let's say, the shadow tankers and the incidents. Although there has been very recently one case where one of the shadow tankers suffered an explosion. The good thing being that when it had an explosion, the vessel was not loaded. That means it was not carrying any oil cargo on board. Otherwise, it could have been a very big environmental disaster. But yes, these shadow vessels, because of the ongoing war between Russia and Ukraine, this continues to be a major threat to international shipping and the environment as well.
All right. Thank you so much for giving us the back end or some details of that report. Nitin Chopra, marine insurance expert at Allianz. Thank you.
Thank you.
All right, now let's go to South Africa, where we told you earlier that the Brics group of emerging markets is ramping up its bid for greater global influence, sensing a moment to capitalize on the world order to build out its ranks beyond Brazil, Russia, India, China, and South Africa. And the pictures you're seeing right there is the press center of the journalists who are waiting to cover that Brics meeting of foreign ministers from those nations. They're going to be meeting in the next 2 days, and the meeting is joined by counterparts from countries including Saudi Arabia, the United Arab Emirates, Egypt, Kazakhstan. And on the agenda is expansion, with as many as 19 countries aspiring to join the potential establishment of a common currency. Remember the conversation about de-dollarization of the global space. Our correspondent, Innocent Semosa, is there, and he joined the Russia invasion earlier. And he tells us that there's still uncertainty concerning the physical attendance of President Vladimir Putin after the warrant of arrest from the International Criminal Court. There fears that the impact of hosting President Putin may have on the economy. Other concerns are creating Brics rating agency, as members perceive that existing agencies are not treating emerging markets fairly. Well, Innocent had an exclusive interview with the head of public policy at the International Relations and Cooperation of South Africa.
The 5 Brics countries are expected to participate because this is their summit. And because it's a summit level, we expect the heads of state. As to whether Russia will be represented by its president, it's a matter that will have to be processed. As you know, in South Africa, Cabinet has appointed an interministerial committee led by Deputy President Paul Mashatile to process the legal opinion that has been prepared by state law advisors on how South Africa should handle the matter of President Putin vis-a-vis the warrant. I'm told that IMC is meeting next week to process the final report for Cabinet.
It's an ongoing conversation there for 2 days, and we'll certainly follow up. And even before the meeting starts, we can tell you that South Africa's rand has slumped to a fresh record low against the dollar on a combination of worsening diplomatic tensions and economic risks. The rand dropped as much as 1% to 19 rands and 87 cents for a dollar on May the 30th, making it the worst performer this month, that worst performer in May and not in June. Too soon to say that. Well, let's leave South Africa and look a little bit into Nigeria now, where we know that the issue of petrol subsidy is really at the top, and some observations have been made that it seems attention is now turning to diesel, since diesel and petrol seem to be at par now when it comes to the prices. And so far we've seen that diesel has been up. That's the price of diesel about 20% this year. But we have Daniela Omubodede joining us now to give us more on this. Hi, Daniela. So I guess this is expected. Everything is increasing at this time following the war going on in Ukraine. Diesel shouldn't be different.
Yes, good afternoon. Thank you for having me. So the thing is that the subsidy on diesel had actually been removed a while ago, but some people are not even aware of this. So some of these marketers of refined petroleum products are trying to capitalizing on the situation and also feeding on ignorance, and also for the fact that they're trying to increase their profit margins. There's the tendency for them to raise the prices of all the refined products, for example, such as diesel. Although this recent subsidy removal was just on PMS, that's well.
Yeah, so how do we expect this to feed into inflation? Already, personally, I bought a liter of petrol yesterday, 500 naira, and we do know that for, the markets, they will feed it into their prices. So how do we see this feeding into inflation?
Yes, so we all know that transportation and logistics attributes to at least 15% of inflation in Nigeria. Already, the demand for forex is already higher than its supply. Many commodities have a forex restriction, and then even those commodities that are eligible for importation do not have access to forex for importation, so they have to go to the parallel market and to get forex at a higher rate. So that's where imported inflation comes in, because they're getting forex at a higher rate to import these commodities, then they sell them they pass on this high cost to consumers in form of higher prices, transportation, logistics costs. We're going to see cost of transportation doubling, and we're most likely going to see inflation spiral in the coming months.
So just briefly now, do you think that over time, since it's deregulated, that, you know, with global influence, everything will normalize, talking about prices?
On a normal basis, global competition is actually meant to affect the domestic price of diesel or commodities generally. But then let's not forget that there are still some local factors peculiar to our Nigerian economy, like inflation, exchange rate, the ease of doing business, purchasing power of consumers, and all of that. What deregulation in Nigeria has actually done is to put the power of pricing in the hands of these importers and marketers. So there's still some very underlying issues in the Nigerian oil and gas industry. And until those are addressed, global competition is not likely going to feed into our domestic prices.
All right, Daniela, thank you so much for that. We do hope everything balances out. But that's it on the program today. Thank you so much for being a part of Business Incorporated. We have a final one tomorrow. Don't miss it. I'm John Mekwa. Enjoy the rest of your day.